Anyways, speaking of all the answers, Frank, give us all the answers about the markets. What are you looking at today?
Ooh. Um, so all I am looking at today is the S&P. That's because
Okay.
of earnings.
And what's your take on earnings? Did you see any numbers come out this morning, or what's causing this
So
pump?
I just I see them beating expectations. That's what it comes out as, but a lot of the expectations are a lot lower than last quarter. So I don't really know how to interpret it. I guess it's not as bad as people think because it's
Mm,
better than expected, but the expectations were low. Either way, I was looking at this chart. Let me redraw these lines.
okay.
I just sent this out in the chat a little bit ago, but I said 4,200 was our our last level, but I'm also noticing larger and larger swings on these higher time frames. The channel is just, I don't know. It looks like we could even test the 4,300 level, and I guess that's another top right here. I originally thought it would not go this high, but now I'm starting to wonder, you know, earnings can cause such a reaction. So I'm
Yeah, it's interesting. Last week we had, I mentioned this a little bit earlier, JP Morgan came out with some better than expected numbers. Part of that is we had the banking fears come into the market, and a lot of the regional banks had massive withdrawals that went right into the big banks like JP Morgan. Despite that, though, we've had more banks roll out earnings that have been sort of a pressure release, I guess, on the market in some ways, because a lot of fear around, our bank's gonna, collapse, or, are they gonna, or more bank runs gonna occur? That fear seems to be a little bit diminished. And again, it will be interesting to see as we get into some big names what that does to the indices. I think, like you said, Frank, 4,300 in terms of a longer term resistance point. You get that orange line drawn on your chart. If momentum picks up on earnings season, I think that there's a good shot that we see that as a target. If momentum stays strong, we get up to that 4,300.
right, and I think financials were like the biggest concern
Yeah.
because of the banking crisis, and to see some of them are still like holding in there and beating expectations. I think Goldman Sachs missed, but when they see if they see like a couple of them doing well, um, the fears aren't as bad, I guess, in their eyes. Um, so I don't know. I'm not trading, or I'm not really looking to short this. Um, I want to pick up S&P long term at some point, but right now it's very difficult, and I don't want to kind of get in and hold it for however high it goes, and then only to watch it
Yeah.
come all the way back, like how it's been acting. So
I think we're
um,
probably on the same page that, like, if you are bullish in terms of where we currently sit, we've had a 4-week run to the upside. It's probably due for a little bit of pullback despite earnings season being upon us, which is, very volatile. I think we'll probably get our chance to buy on pullbacks, and if that sets up, I think that there is still that we have there's enough volatility in the markets, there's enough fear still stewing, that I think there will be dips along the way for us to take advantage of.
Happy birthday to you. Happy birthday to you. Happy birthday, dear EdgeFinder. Happy birthday to you. Woo!
right. Speaking of which, long term holding. Um, so I'm pretty young. I'm like 20. I'm 23, so I'm just starting to, I'm planning for retirement already. So I put like, if I were to do sort of like from a trading perspective, I would kind of focus on growth, but I'm putting like stuff in like an IRA right now. So I'm kind of just investing in things like the SPY or the NASDAQ, just holding on to things for the long term, and every month or so or every week, just putting little by little in and till I'm 60. So that's kind of what when I talk about trade or
Longer
like
term stuff. Yeah.
longer term S&P, like this is 50 years down the line. It's not the next year or so. It's not the next couple weeks. Obviously you can trade this all the way up to the high. Like it looks like it wants to go there. And I don't know if it'll stay, but over time, markets trend upwards. So that's kind of what when I say holding on to the S&P or the NASDAQ long term is when I mean like investing, like holding on to it for decades. So
Right. Yeah, no, and that's of course in the back of our minds as well. I think even if you're trading it, even from a trader's perspective, if you're looking at the indices and also gold as well, these things tend to over the long term break highs and continue higher. Do you have any thoughts, Frank, on this gold rally? I mean, we dipped back below our 2000 mark. In fact, we're trading as we speak just underneath the 2000 mark. I think conditions favor a potential break and retest back up to the all-time high. We've been in a range here for a number of years where we haven't been able to break that 2070 mark since we had the Russia-Ukraine situation where we retested it. We had the 2020 run-up where market was flooded with money and a lot of that went into gold. We retreated off that, made lows even into the 1600s. What's your take on that? Do you think we see a break of the highs at some point here?
I definitely do think we can test that level again, but I don't know in terms of breaking and running to like the 2100s. I'm not sure how far smart money wants to take this, because when I looked at it earlier this week, they're already starting to kind of trail out. And I'm not sure if that's because they're just taking profits after this massive run, or if they're just like scaling back for the short term because of earnings, and they're afraid of the economy looking stronger. And then
are you looking just to talk about what you're saying there with are you talking about the COT data?
Right.
In terms of smart money. If we can just show my screen for just a second, I think what you're talking about, are you talking about the latest long change down by about 6,000 long contracts, which like you said is some potential profit taking, down 6,000 contracts from its previous reporting. For those of you guys who are curious what Frank meant by that in terms of profit taking potentially, this is we track the smart money tracker here on the EdgeFinder very often. This is COT data, and Frank, continue. I just wanted to showcase to the audience what you're talking about there.
It's still like kind of confusing because they're getting out of both. They're kind of lessening their position. Yeah, they're shrinking positions, but overall they're very majority long of this metal. So 79% long, 21% short. I mean, I think it's still got potential. If we saw like a massive decrease in long contracts and then an increase in short contracts, it'd be a little more concerning. But right now it looks like they're kind of stepping away from the gold market for a sec, or just shrinking down and just making sure that earnings isn't gonna flood the market with lots of money, and they're gonna have to switch to stocks again. So very interesting, because the S&P is the same way, except inverse, I guess. They're increasing longs and shorts, and they're actually the ratio is very similar. It's 20 something % long, 71% short.
Yeah, so I'm looking at it. You got 29% long, 71% short. An increase in both long and shorts going into earnings, which is really interesting. And then also, Frank, we talked about this yesterday a little bit, but same thing with the NASDAQ. Well, actually, NASDAQ is the anomaly here, Frank, because what we have here is we have about a 50-50 split, but the most recent reporting shows a shrink in shorts and a huge jump in longs.
So
very interesting.
It is very mixed sentiment, but it's also it could also be the start of a shift in sentiment because we're looking at a decrease in shorts and they're becoming increasingly bullish. So we'll just have to see there. I think in order to make this more of a confirmation is if we can see less positions on gold, more positions on S&P and NASDAQ. And also the bond market needs to cool down too, because they're heavily short bonds. So the yield, they're really betting on that yield rising.
Right. Yeah,
So-
it's an interesting time, and I think with earnings season there will be a lot to report on. So we probably call it there for today. Frank, thank you, of course, as always, for coming on and sharing your take. People every day they want more and more Frank. I think this is just going to be it's going to start becoming the Trader Frank channel and the A1 Frank. So it's just going to take over both channels. Thank you for coming on.
Appreciate it. Thank you.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EdgeFinder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.